Hey, it's Chris Vermeulen from the technicaltraders.com, and today I want to talk about the equities markets running higher. They've got more upside potential. We've got precious metals setting up for another leg higher. And overall, I think the markets are on the last legs before I think we go into a major market correction. Taking a look at the charts yesterday, pretty nice day in the markets. We end up rallying up, hitting our target for QLD. We saw overall broad market buying. We saw lots of money flowing in. The Fed put the brakes on a little bit in the afternoon, talking about maybe just one rate hike. People, I think, priced in two, supposedly. But anyway, other than that, the markets are breaking out like we expected. If we take a look at the SP 500 and just do a quick Fibonacci extension based on the current price action of where these highs and lows have been, we can see the market has had that rally that we've talked about. We've got this first leg up to the high. It pulled back down to this low, and we've hit that 168. So this is a level generally you see a little tiny pause, could be for a day or two, and then we could go up and hit this 100% measured move, which is right up here. So there's still potential here for the markets to pop and extend and go higher. Overall, markets look really good, and we did have some overbought market condition yesterday, or more so FOMO. We can see this red indicator here above our blue line, the 3 threshold. Usually when we see it get up there, we usually see the market pull back and take a little bit of a pause, which it did yesterday. Today, it looks like the market's going to open slightly higher, but I wouldn't be surprised if we see some chop here. Again, a big gap yesterday. Gaps tend to get filled, so this could very easily move down and fill this gap before potentially going higher. That being said, if we go and just look at the charts, there's all kinds of major gaps on the chart. We got a big gap down here. We have this gap ended up getting filled, but we have a massive gap down here. I think there's big gaps much lower on the charts. There's gap down here. So there's all kinds of places where this market could continue to have gaps. Again, we got a big gap over here to the downside. And of course, we got a big gap yesterday. So we'll see how things unfold. The markets, I think, are kind of really in that late stages of a stage 3. They're on that. I feel like it's the last leg. We're pushing higher. This is kind of just really a free trade, kind of icing on the cake, I think, before things really top out and go into a much bigger correction where we'll probably be trading some different assets. Bonds probably come back to life. The US dollar index, all of those things could become our best friends here when the stock market eventually starts to break down and start to head lower. Other than that, if we go and take a look at where money is flowing today, so small caps are down, large caps are up. We do have gold down 0.75%. Having a pop here really just in the last 30 minutes with the 8:30. I guess there's some type of economic data or something that came out. Silver was down 3%, still almost down 3%, flushing lower. Again, just having a rebound here in the last 30 minutes. But overall, it's flagging sideways. The precious metal space is somewhat out of favor until September, seasonality-wise. But when we look at this chart, it's a series of rally, pullback. They still look very bullish. They still are in a major super cycle to the upside. They're set up, primed and ready. They could find a bid and push higher. I do think silver has potential to still run to about 35, 36. I think gold can still run to 26.50. So there is still another leg up in this market. I probably shouldn't bring up the seasonality that much because it really means very little. But the charts still look very strong, and they're flagging out here in a bullish way, pointing to higher pricing. Where else are we seeing money flow? If we take a look at bonds had a nice pop there yesterday. They're just starting to get a pop here in pre-market, heading back up to yesterday's highs. But overall, bonds are moving because people are thinking interest rates are going to get changed. So it's big pops and drops as expectations are met or lost there. If we take a look over at oil, we have oil down 0.5% this morning. It's popped right up into resistance, right through the heart of this oscillation. This big pause through here was a big breakout level. So it's a pretty critical threshold. It's also the 50-day moving average. We'll see how this plays out going forward. If we take a look over at the hot list, we're seeing semiconductors up near the top here, or at the top, continuing to extend. I've talked about how semiconductors and Nvidia pointing to higher pricing still, which will drag the large cap indexes up. TAN was at the bottom of the list. Now it's at the top. This goes to show we have SILJ is down near the bottom. GDX is down in the lower quadrant as well, falling out of favor. Again, this is why we have to manage those positions. We hit a target on SILJ, and then our entry price stop kicked us out to protect it. And of course, it's struggling to get some traction here. URA is down near the bottom. Again, all these were at the top of the list just like a couple weeks ago. Now they're near the bottom, and this is exactly why sector rotation during stage 3 tops are very difficult. Things are in favor, and they just don't have the follow through. They're only in favor for a little bit, and they fall back out. So that is one of the big problems with this market condition. And it's been like this since pretty much February of 2021. So several years it's been like this, and that's why we've been focusing on the index trading, CGS, and focusing on strategies that that do well in this market condition. Overall, when we look at the grand scheme of things, the dollar, it definitely had been volatile, very sensitive around what's going on with interest rates and economic data. It's had a big pop, a big pullback. Overall, grand scheme of things, I believe it's still basing. Now, there's a lot of people saying they think the dollar is going to collapse and be worthless, although I have heard that for literally the day I got into the stock market. Pretty much people were saying the dollar is going to collapse and be worthless. It's just like silver is going to be worth like $400 and now there's going to be a huge short squeeze. Don't get caught up in people's opinions because that's all they are. Nobody knows what they're going to do. The key is to follow price action. I have a bullish bias on the dollar because I believe we're going to see things get pretty gnarly in the economy and the stock market. We're going to see the dollar perform. I think we'll see rates eventually start to fall, which will create an opportunity for the bond market. So all kinds of cool things I think are going to be coming together, but it's all speculation. We just follow price as that unfolds. So other than that, that is about it at this point. We're just going to let the markets continue to do their thing and see if some of our positions can rally and get a bid under them and hit some more targets. And just a reminder, these short videos are just a snippet, a small taste of what I offer in my premium investing signal newsletter at thetechnicaltraders.com. And if you like these videos, make sure you subscribe to my YouTube channel, click the subscribe button, hit the bell button. So every time I do post some analysis, you can get caught up on the markets of what to expect and what's unfolding live as we go.